Imagine you have $10,000. It's a significant sum, representing hard work and careful saving. Now picture putting that $10,000 in a standard savings account 10 years ago, a place where many believe their money is safe and sound. After a decade, it'd likely be worth about the same today, a rather disheartening realization. The numbers might look similar, but the story is far from unchanged. Except, and this is crucial, it buys you less. The silent thief of inflation has been at work, eroding your purchasing power, but what if instead, you'd invested that same $10,000, taking a different path with your financial future? Specifically, imagine putting it in a low-cost S&P 500 index fund, a diversified basket representing the broader market. That initial $10,000 investment could be worth over $30,000 now, a testament to the power of compounding and market growth. That dramatic difference highlights the fundamental distinction between simply saving money and actively growing your money. From a young age, we're often taught to prioritize saving, to diligently put money aside. But what if saving alone, without a strategy for growth, is actually making you poorer in the long run? Today, let's break down the common misconception that stashing cash in a bank is the ultimate financial strategy. We'll explore why relying solely on savings accounts is often a slow and ultimately inadequate path to financial security. And more importantly, how you can shift your mindset and strategies to make your money actively work for you, generating wealth and opportunity. Ask yourself a crucial question. Is your current financial plan primarily focused on simply preserving what you already have, keeping it safe and untouched? Or is it actively building the future you truly desire? A future filled with possibilities and financial freedom. Let's delve into the reasons why your traditional bank account might not be the financial hero you've always believed it to be, and uncover what genuine, sustainable wealth creation truly looks like in today's world. Most of us follow the same script: get a job, open a savings account, and feel secure as the balance grows. But this blueprint is outdated. Today, even high-yield savings accounts barely keep up with inflation. If inflation is 3% and your account pays 4%, your real gain is just 1%. Your savings account is like a parking lot, safe for short stays but costly if you leave your money there for years. Use savings for emergencies, not long-term wealth. The real mistake? Treating your savings account as a vault instead of a waiting room. True financial security comes from owning things that generate more cash. Ready to see how to put your money to work? We've talked about the importance of saving, but what's the alternative to simply holding cash? Assets. Let's delve into what they are and why they matter. Assets are fundamentally things you own, tangible or intangible, that have the potential to grow in value over time, or even better, generate income for you, providing a steady stream of revenue. Savers often prioritize holding cash, seeing it as a safe haven, but investors understand the power of buying assets to build long-term wealth. While cash, especially in a low-interest environment, loses value to inflation, slowly eroding its purchasing power, assets like stocks, representing ownership in companies and real estate, tangible properties that people will always need, tend to grow, often outpacing inflation by a significant margin, preserving and increasing your wealth. The S&P 500, a broad measure of the U.S. stock market, has averaged about 10% annual returns historically for decades, demonstrating the long-term potential of investing. Compare that to the near-zero real returns, after accounting for inflation, from traditional savings accounts. Investing isn't about, as many people mistakenly believe, being a genius or having some innate financial talent, or taking wild, speculative risks with your hard-earned money. It's fundamentally about managing risk intelligently and strategically letting your money work for you, generating passive income and building wealth over the long term. The real risk, the one you should be most concerned about, is letting your cash, your savings, lose value year after year due to the relentless force of inflation. Shift your mindset from a consumer always buying the latest gadgets to an owner mindset, someone who seeks to own assets that appreciate. Don't just buy products and services. Own a piece of the companies through stocks behind them, sharing in their profits and growth. Take a look at your bank statement. How much of your money is sitting idly in cash, and how much is strategically invested in assets that can build long-term wealth. Buying assets and building wealth is easier and more accessible than ever before, thanks to technology and innovation in the financial world. So, where do you begin? What's the simplest way to start your investment journey? One of the most straightforward and cost-effective options is investing in low-cost index funds. Another excellent choice is ETFs, exchange-traded funds. These funds offer you tiny slices of ownership in hundreds of top companies. It's like having a diversified portfolio all conveniently packaged in one basket. The best part is, you can start investing with very little capital. In fact, you can begin building your financial future with just a few dollars. And remember, over time, even small, consistent investments can make a big difference. These small contributions can grow significantly, potentially transforming your financial landscape. This is all thanks to the power of compounding, where your earnings also start earning. Beyond the stock market, real estate is another powerful asset to consider for long-term growth. You don't necessarily need to buy a whole building or a sprawling property to get started. Consider exploring strategies like house hacking, where you live in a portion of your investment property. Another option is investing in REITs, or real estate investment trusts. REITs are companies that own or finance income-producing real estate, which let you own shares of a diverse portfolio of income-producing properties, from apartments to commercial buildings. REITs trade just like stocks on major exchanges, making them easily accessible. They give you exposure to the real estate market and its potential returns. This allows you to participate in real estate investments without the direct responsibilities and hassle of being a landlord. Ultimately, the key to successful investing is to start taking action. Begin by researching and picking one asset class that genuinely interests you and aligns with your goals. Then, take the first step, no matter how small or insignificant it may seem. Every journey begins with a single step, and every investment portfolio starts with a small beginning, no matter how small. Remember, don't let perfect be the enemy of good. Striving for perfection can often lead to inaction. Instead, focus on making progress and just get started on your investment journey today. Here's the bottom line. Saving is for emergencies. Building wealth means buying assets. Assets let your money work for you, outpacing inflation and compounding over time. The difference between savers and investors? Linear growth versus exponential growth. This week, do two things. First, calculate how much more you're paying for essentials compared to last year. That's your personal inflation rate. Second, open an investment account, even if you don't fund it yet. Get comfortable with the process, keep learning, explore topics like Roth versus traditional retirement accounts to maximize your returns. The journey to wealth is a marathon, not a sprint. Start thinking like an owner, not just a saver. The power to change your financial future is in your hands, starting today.